Congratulations, you are not as poor as you were on Friday of last week. What's going on, everybody? It's your boy Crypto Bobby. Hope you are having a great day, great night, wherever you are watching or listening in from. And yeah, I am luckily not as poor as I was on Friday. Hopefully, you are in the same boat as well, because Bitcoin has had a very nice run on Sunday and today, Monday, being a holiday actually in the U.S., being President's Day. So a nice long weekend, little mini run here for Bitcoin, for Ethereum, for a number of the mid to high cap altcoins as well. So a lot to unpack there. Also, a piece of information that came out from Cambridge Associates that I think kind of goes along with what we've talked about on the channel a few different times before. So a lot to unpack in today's discussion. So let's hop into it. So one of the first things I want to talk about before just looking at what's happened really over the weekend, today being February 18th, but what's happened over the weekend with Bitcoin, with Ethereum, with a lot of the other altcoins as well, just generally speaking across the board in crypto. Want to look at this article from Bloomberg, and the title of it is "It's Time to Consider Crypto as Pension and Endowment Advisor." So this is something, the first paragraph, I mean, really kind of sets the tone and says exactly what the report is about. But institutional investors should consider dipping their toes into cryptocurrencies, according to Cambridge Associates, a consultant for pensions and endowments. I'm actually familiar with Cambridge Associates. A lot of my friends actually from the college I went to, they recruited pretty heavily. So they have an office in Boston, they have an office in DC. A lot of friends that actually worked for Cambridge Associates in the past. And they go on to continue to say, despite the challenges, we believe that it is worthwhile for investors to begin exploring this area, meaning cryptocurrencies, today with an eye toward the long term. Though these investments entail a high degree of risk, some may very well upend the digital world. And they continue to say some pretty actually straightforward stuff that I think anybody with a brain has been saying for quite some time, but essentially saying for those prepared to take the plunge, Cambridge recommends, and this is by recommending this to pensions and endowments, which manage billions and billions and hundreds of billions of dollars, recommend they take a considerable amount of time learning the space, including surveying different ways of investing, from illiquid venture capital funds focused on crypto to buying tokens on an exchange. And Cambridge Associates, which we just discussed, they typically advise institutions that manage more than $300 billion. So when you're looking at the average firm that Cambridge Associates advises and consults, they are over twice the size of the market capitalization of the cryptocurrency market. So that is each individual pension and endowment fund that Cambridge typically supports and advises. They're advising funds that are over twice the size of the cryptocurrency market cap to begin looking, researching, exploring ways in which they might start to leverage some of that money that they manage into potentially crypto. So I think this is really, it's probably somewhat under the radar news at this point in time because the market is pumping. But when you look at this, and we've talked about it in the past where everybody always talks about the herd is coming, the institutions are coming to the crypto markets, all that good stuff. And they're not necessarily coming to save you. That was a big narrative that was discussed and kind of chatted about in late 2017 to really kind of capitalize in the run-up of the bull market. But what we are looking at now is the cryptocurrency market, Bitcoin and perhaps some of the other ones, really being potentially a legitimate investment class for larger institutional investors in this arena. And the report from Cambridge, I think, does go to show that people are taking it seriously. Whether you have JP Morgan last week, granted it's not a cryptocurrency by any means, but looking at the technology that drives Bitcoin, Ethereum, and a lot of these other crypto assets, looking at that technology and then having that associated with JP Morgan. Now you have Cambridge Associates coming out, again, a company that advises and consults $300+ billion pension and endowment funds. I do think that is a really positive thing. And while we always have to take this stuff slow and take it with a grain of salt as well, but taking it slow and thinking, they are not recommending their clients to begin YOLOing money directly into spot Bitcoin long or going on BitMEX and 100xing or anything like that. Not at all. They do forewarn the obviously significant risks of investing in cryptocurrency. I mean, Bitcoin is down 75% this year, or in the past 300, 400 days, whatever it might be. There are obvious risks to that, but if you take the time to actually put in the research, there are significant opportunities, and there is a non-minute chance, like they say, that Bitcoin and cryptocurrencies can upend the digital world, which is worth having, whether, again, and this is not looking at these pension funds, and we talked about this previously, but looking at these pension funds, things like that, it doesn't mean that they're going to invest 10, 20, 50% of their portfolio into cryptocurrency. But if you're looking at 10 basis points, 25 basis points, 50 basis points of a 300, 400 billion dollar fund, that's a material movement to the cryptocurrency marketplace, and would most likely be a positive situation for myself and yourself as well. So definitely something to consider. I will link to the article here in the YouTube and podcast description. It's a pretty short article, but definitely worth taking a read through. Now, in the past 24 hours, Bitcoin is up about 8.5%. If we go to look at Ethereum, Ethereum is up about 18.5% right now. It has been on a pretty much moonshot from about $122, $121 straight up to $144 as of the time of recording this video. Now, it did push up to about $148, Ethereum did, and it has since pulled back a little bit since that 144 mark, but really strong buy volume on the way up, and it's pretty encouraging to see. And this is not just Ethereum, not just Bitcoin. If we pop over to On-Chain FX, what On-Chain FX considers to be large cap cryptocurrency, the top 17 they have here, anything over about a $500 million valuation from a market cap perspective, is in the green against USD. And I would say the worst performer at this point in time outside of Tether, the worst performer at this point in time is NEO, which is only up 5.27%, but Bitcoin up about 7.7% right now in the past 24 hours. Ethereum up 14% against USD in the past 24 hours, and the biggest winner so far in the past 24 hours against the USD is actually EOS, which has performed quite well. But again, shout out to On-Chain FX for continually putting in some really, really nice features into this. If you're not using On-Chain FX, and I have no relation to them at all, but if you're not using On-Chain FX, I think it is significantly better at this point in time than CoinMarketCap. Just the features that they have available, the sorting features, the data points, I'm a really, really big fan. So if you haven't actually used it yet, I'll put another link to that as well. I think it's now, since Messari acquired On-Chain FX, it's messari.io/OnChainFX. But some of the cool features, and we've talked about some of this before in the past, but they actually have a cycle low now, which is pretty cool to see, because when you look at this data, they obviously have a couple different things that are quite depressing, and then they have a couple data points that are somewhat encouraging. So if we want to look at the depressing sides of the depressing sides of the data, we can look at the percentage down since all-time high. For Bitcoin, that is, a casual 81% down since all-time high. For Ethereum, we're only down 90% since all-time high. If you really want to get depressing, if you bought in December 2017, January 2018, you really want to drive towards the cliffs here, you click on that break-even multiple. And to break even as an investor in Ethereum, you need a 10x. If you invested in XRP at the absolute top, you need a 12.1x. If you invested in NEO, you need a 22x. A Cardano to break even to the all-time high, because Cardano is down a paltry 97%, you need a 29.7x. So pretty crazy to think about those numbers. But if we get rid of the percentage down from all-time high, and we get rid of the time from the all-time high and the break-even multiple, we can also look at the cycle low against the USD, which is an interesting data point here. And they consider this is the lowest trading price in USD of the asset since its all-time high. And they say this is not the absolute lowest price, but this is a historical data point that they utilize. So the lowest trading price in USD of the asset since its all-time high. So for Bitcoin, the cycle low at this point
is $3,126, which occurred 2 months ago. For Bitcoin, it's actually up 23% since the what they consider to be the cycle low. Now, if you look at Ethereum, and this is where it gets somewhat encouraging, and depending upon where you deployed capital is obviously the big thing here. If you deployed capital into the cryptocurrency markets in December 2017, January 2018, doesn't make too much of a difference. But if you've been maybe diligently dollar cost averaging your way in on a consistent basis, and you put in, maybe you got a little bit of money in December, maybe you took your Christmas bonus or whatever you did, and you threw it into Bitcoin, you threw it into Ethereum, you threw it into your favorite cryptocurrency, whatever it might be. Ethereum, since its cycle low, which was 2 months ago where it hit $81, is up 77% right now. Pretty damn impressive move. You look at Tron. Again, I'm not the biggest TRX guy, but Tron is up 135% against its cycle low. You can look at Maker, MKR. It's up 111% since its cycle low. BNB, Binance Coin, is up 127% since its cycle low 2 months ago. And to me, I don't want to say there is certainly no assurance that a bottom is in by any stretch here, but when you look at the cycle lows, and if we can even open up this up to medium caps here, which are 100 to $500 million market cap, when you look at the cycle lows here, you could see the vast majority of them at this point in time are about a good amount of them are about 2 to 3 months ago. Now there's some extraneous data points here, some extraneous other aspects, but it's definitely nice to see some of these assets that appear to have bottomed out and bounced in a fairly significant way. I mean, when you're talking about Ethereum bottoming out at $81 and now up to $144 as of the time of recording this, that's a 70+% move. So if you did deploy capital at the right point in time, granted you're never going to time the bottom perfectly, but even if you didn't get it at $81 and you bought it at $100, you're still up 40%. That's pretty damn incredible. Granted, obviously, there's a lot of different components behind that you want to think about, but this is one of the reasons I think that On-Chain FX is doing a really nice job, because of the different data points that they can put into place and a few different things that I haven't even begun to play around with. You have the staking yield. You also have the staking type, the staking minimum. So starting to calculate whether it's returns from master nodes or yields from master nodes or DPoS or something like that. There's a lot of different things that you can start to calculate with On-Chain FX that I'm enjoying here. So I think this is just a random data point that you can't see on CoinMarketCap as of now, at least, where you look at the percentage down from all-time high and you're like, damn, this sucks. But that cycle low number is pretty interesting and pretty cool. So you might be wondering, Bobby, what are you up to at this point in time? What are you thinking for yourself personally? And for me, I am not making any moves at this point in time. I am happy to kind of stay where my portfolio is at this point in time. Maker is treating me well. Ethereum is treating me well. BTC is treating me well. So I've been happy to see the relative moves here. And I do think I personally would be a little bit hesitant for me to deploy. I would actually be very hesitant to deploy any capital after an 18% move for me at this point in time. But the one thing that I am looking at when I am evaluating Ethereum is, number one, it almost looked to me like Ethereum kind of kicked up some of this move where Ethereum moved before Bitcoin did, and Bitcoin has since moved up quite nicely as well. But I'm starting to look at the Constantinople upgrade, and that was something that we previously talked about, or I previously talked about. This was probably over a month or so ago at this point. But I was excited about the buzz that the Constantinople network upgrade or fork for Ethereum would bring, and that got pushed back, that delayed things, and that kind of pulled back the price of Ethereum. But we might see, I think, another run up or another little bit of hype, and especially if Ethereum can execute on this Constantinople hard fork upgrade, that would be great to see, and I think that would have a positive impact on the price of Ethereum. And I also think, just generally speaking, sentiment in the industry, when you look at this Cambridge Associates report, when you think about, not necessarily that I think JP Morgan has any impact at all on cryptocurrency, but there have been some interesting tweets and things like that, even just like of these venture fund crypto fund investors that are saying, what is this JP Morgan news? What does this mean? I think it just lends credibility to the industry, even though it's, in my opinion, non-competitive to Bitcoin, non-competitive to Ethereum, not necessarily a value add either, but I think JP Morgan, when it's in Bloomberg and when it's in NBC or CNBC, when it's in these places and they're saying JP Morgan and cryptocurrency in the same sentence, I think that adds validity more than it takes anything away, which now that I'm looking at it, I think is a somewhat positive thing. Like even talking to my mom, who knows absolutely nothing about cryptocurrency, and she calls me the other day and she's like, "Hey, yeah, I heard JP Morgan's creating their own cryptocurrency. What does that mean?" And it's like somebody that is the biggest normie on the planet and doesn't necessarily have any understanding about cryptocurrency, but still hears that JP Morgan is getting into the space. I do think, like I said, that is associating that name is still like a positive impact, probably more positive an impact than we could think, just because it's going to open up the door for, I think, more people in the future here. So that's just kind of where my head's at this point in time. Would love to hear where your head's at in the YouTube comments. If you're watching on YouTube right now, definitely sound off below. Would love to hear that. And if you're listening on the podcast, as always, hit me up on Twitter at crypto_Bobby. Always appreciate your thoughts via Twitter as well. Until next time, make sure you hit that thumbs up button, hit that like button. Helps get this video out to as many people as possible. Crypto Bobby signing out. Hope you have a good one. Peace.